Hey guys, and welcome this morning. Great to have you on. You might notice my hair's getting a bit long. I've been working away in the office for a long time. Now, just before I start, I'm going to say a couple of things actually, because they ran across my desk this morning and they ran across my mind. With the global economy changing, lots of people are stretched for money and things like that, and everyone's looking for a way that they can change things for themselves and make smart decisions effectively. And that's more or less why I put these videos out, so people don't make stupid mistakes and lose all their money. Now, I'm heavy on risk management, okay? I want everyone who watches this to be completely in control of their capital at all times, because at the end of the day, the thing that makes this all work is risk management. And that is why, if you're sitting and you're here for a trading signal, don't continue watching this video, because I don't believe in signals, okay? You're never going to get your risk matching someone else's unless you know what their risk plan is. So whether you're buying or selling, it doesn't matter. If your risk isn't right, you will lose all your money. That is just how it goes. So it's no good just gawping at signals all day and not taking action at all. You need a plan and it needs to work. So if you do want that, go in the description of this video and go and have a look there. But anyhow, let's talk about that in relation to the euro dollar. Now, the euro dollar in particular, you will notice I did an analysis recently. I said I wouldn't be surprised if we break this high. I don't think it's ran out yet. I don't think it's finished. And of course, you can see it's now trying to push above this. Okay, now if you lightly shorted that, then I would just kill it off. Okay, you're not really got much impetus to the downside. And it's just because the price is hitting into these former levels all the way back here, but they're fairly weak. And I know that because if I flick my time frame up, you can see it a bit more clearly. You really don't have much reference until you get up to this one, okay? Or more so in here. So you could probably plant a front runner at this first line I've drawn, and that is slightly higher than where we just hit. Now what's happening here is the price is hitting this small minor level and it's teetering, okay? And it's probable that we're going to get up higher to the next one, as I've drawn up here, and that's going to come around 108. Now, there's no point in thinking, oh, great, that's a signal, I'll go short, because your risk is not going to be right for what you're doing. If I flick to the monthly, okay, you have to know what you're going to short here. When the time comes and you want to get short, you need to know how much you're going to short. Okay? If you don't know that and you do a ridiculous position size and the price comes up here, which is more than possible, and we're completely prepared for, you'll get blown out. Okay? And it will happen fast. So don't look at this for signals, because signals don't include risk management. I'm not printing on the screen here what size I'm taking and how much capital I've got. Okay, because that's what people pay me for. They pay to know my risk management methods and price action rules. That's basically how trading works. So, what am I really expecting from this? I think you will just keep pushing up. You'll probably hit into your key moving averages there. I would probably look around here for risk averse longs. Okay, so this is going to be ideal for people who are risk averse, maybe newer traders, people who just want safe trading. You could get short at this point. And that's because you're reaching key resistance levels. And if you look at your fib, we're not doing the magic line theory where you hit a line and bounce away. You're about 50% of the move up. So if you think about how much you've rallied, that's a considerable way if you're looking for the price to change, because you've already come up so far for since October. Okay, so that's into November, December now. It's over 3 months, right? 1, 2, 3. You're in the fourth month of up move. That's a fairly long way. Okay. So you want to start to look to scale into the market. If you longed it previously, you don't want to be long now. You want to be out of those longs because you've had 4 months of up move, right? Now, if you want to rebuy it, you're going to need a significant fall. Okay. You're going to need a further fall because the price isn't feasible where you've got it now. It's just high. Okay. And you can tell that by looking at your stochastic oscillator. You shouldn't fall in love with this indicator, but the fact is, would you really want to be buying something when the stochastic's already up top? When it's already gone up, ask yourself simply, am I buying early or am I buying late? Do I want to buy into an overbought area? No, is the answer. Well, it should be no, I would hope. And that's blatantly obvious. Now, I've just built an indicator to do that for you to keep track so you don't fall into that trap. And that's how you can trade it. Now, if you're intraday and you have correct risk management rules and you're sat at your computer like me, you could take a long at 105.6. And if you're really risk averse, you would just leave it off. Now, I say about this in most of my analysis about being risk averse. And that's because generally the population of TradingView isn't risk averse. So I do these videos so people don't suffer and make the wrong decision, basically. Okay, so you might get perhaps a light dip long there, and then you've got a further position lower. But generally, the point of today is to understand that you can't just follow signals with no risk management. If you don't have risk management, you don't have trading, right? Because it's always going to be unsustainable. Imagine opening a business and spending all your money on chickens, right? And you've spent too much money on chickens and not enough money on the feed, and you don't have the money to feed the chickens, you're going to go bust. It's almost the same thing, right? If you run out of feed to feed the chickens, the business ends. Okay. And if you run out of capital to feed your positions, the business also ends. So that's why you need risk management methods, price action rules, and hedging methods, because that way you can control that feed coming in and you can always be on top. If you don't have that and you're sitting here every day gawping at the screen, thinking, wow, I'd love to get this right, things aren't going to happen. And that is fact. That's harsh reality. I started trading when I was 13 and a half years old, 10 years ago. Okay. So I knew I'd have to put the work in, but I enjoy it. So that's fine. But even making slight adjustments, guys, making little changes in your trading, like I'm saying, knowing how much you would buy at this point compared to this one in relation to your capital is so powerful, and it will change everything for you. And knowing the natural flow of the market to the upside as well within that is greatly important too. So that is what I'm saying today, guys. Know your risk always, have a plan. A plan is great. If you don't have a plan, you need to make one or get one off myself. And you just need to use a trading journal. If something goes wrong, you note it down. What you did, what your risk was, where you bought or sold, and then look at what happens and think, okay, I'm not doing that again. So bear that in mind. That's a good lesson for today. But thanks for coming, guys. As always, if you want to get in touch with me, do it under the video. Thanks for watching. See you in the next one.